One.
I know y'all don't like when we talk about sports, but when the Motor City Kitties are one game away from the Super Bowl, we got to bring it up. That's good news. The bad news, Aaron was cheering a little too much at the game, and he's got a rough voice. But we're going to talk the markets anyways. SMCI rally adding on it today, dragging along Nvidia, AMD, Broadcom. It's a chip rally once again. Problems at ADM and not good. That's your disaster stock of the day. We'll talk to the cow guy at 8:10. Get his perspective on the markets. Big earnings week. It's Monday. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
All right. Good morning, traders and investors. We are picking up right where we left off on Friday. Up 19 and a quarter handles at 48.8875. That's a new all-time high in the cash. Well, the futures, we could talk about that in a little bit. You have the dollar in the red by 14 cents at 102.93. You have the bonds up nearly a point, trying to get into that 121 handle. Crude just seems to be stuck at 73 handle, up 21 cents at 73.46. Gold flat, silver taking a hit, down 40 cents at 22.31. And Bitcoin still unable to catch a bid since the rollout of the ETFs, but you are starting to find support just above the 40K level. I'm going to bring on Triple D here. And Triple D, we have Aaron kind of not feeling well today. Let's get it on. I guess I'm the only one here that's like long and strong. How you feeling today?
I'm okay. I have a sore throat, but my sore throat isn't from yelling at the TV. It's just from this stupid flu bug that day 16 won't go away. I'm going to fight through it for you here, though. And Aaron is actually got a sore throat just from yelling too much at the TV yesterday with the Lions. So, I mean,
TV? No
wow.
way, man. He was at the
Bring him in.
game.
Bring AB into the
Okay,
background here,
let's see.
too.
Ragged
Little bit of
AB.
Lions talk off the hop.
What? How we doing, Zinger Nation? As you guys can
Wow.
tell, my voice is a little bit. It's not like it normally is, but we were, yelling loud at the game. We also have this video of
Show
our
this.
of
Blow
Jason
this up.
Raznick and his
Oh, my
kids,
gosh.
Josh Reynolds.
Look
After
at,
the
look at him.
touchdown.
Look at him. He's going crazy.
I mean, that's how
Josh is there.
the energy and
Phenomenal.
the energy in the whole stadium yesterday was just crazy. And I mean, I wish I could make it out to San Francisco, but I don't think that's going to happen. But if they do win that game, then I will try to make it to Vegas for the Super Bowl.
He got
What
on
are the
the
Super
big.
Bowl tickets going to be? How much?
Oh, jeez. Oh, man. I
Just to
don't
get
know.
in, like nosebleed. What do
One
you think it is?
SMCI, 3 SMCI shares, maybe by the time it.
You think so?
Yeah.
You
By the
think
time- by the
$1,500
time-
gets you in?
By the time, well,
I don't
by
think
the time
it
the Super
will.
Bowl is, SMCI might be at $1,000 a share. So
Yeah, it might be. So it could be three. So it could be $3,000.
Yeah.
No, curious. 1,500 is what Chris is saying. Sounds light to me. 1,500 sounds like it's worth going, Joel.
It's
Like,
in
I mean, this
Vegas,
is never.
Dennis. It's in Vegas. That's where the
Oh, it's
Super
really
Bowl.
worth going.
Yeah, Legion Stadium. Oh man, a Super Bowl in
Lombardo
Vegas.
says 9,000. Nev says 7,500. AH says 12 grand. 1,500
All
sounds
over the
really
place.
light to me. Are you looking it up? Can we look it up right
Oh,
now?
man.
I'll look it up. But the thing
AB,
is,
go look it up in the background. Maybe
the
we're all
thing-
going to go road trip.
the thing
We
is,
know
is
Raz is going to be there if they go there.
the ticket prices will fluctuate a lot based on who makes it. So if it's like Chiefs, if it's a big game, then it'll be I mean, the Lions would probably be one of the ones that would drive the ticket prices higher, I would assume.
Oh yeah. Oh yeah. It's sad.
It's
Well,
fan base.
it depends who gets there. But Dennis, let's just get right to this SMCI. I hope you kept your fingers off the keyboard here. What a day. You go, well, maybe this could go up 100. Holy macro, went up 100 and got another 20. Is this just a repricing based on its
Yeah.
PE ratio?
Yeah, it is. I mean, it was this sleepy value AI play, and we talked about that to a certain extent. Smaller company, not super widely followed, is now. But when I added it to my acronym, I like the PE. It was trading around 15 or 16 times earnings, and we know, that's going to be a major player AI. I mean, it's a smaller company though, and not as widely followed. So I kind of like the pullback. I've been long it since about 250, I think.
Yeah, I
255.
remember when you bought it.
I bought it back in like the fall. So when it pulled back, because I thought this would eventually be, a play that, would pay off. And I added it to my acronym here just because I'm big on AI for 2024. Well, they didn't just come in and raise guidance. They raised guidance by like 25%. So, I mean, all of a sudden, it's talked about on CNBC all day, talked about in the media all day. All of a sudden, this is on the radar as a major AI play. And you look at the PE thing and you're saying, well, it's trading like 18, 19 times only here now because they raised guidance so much. It just basically made up for the guidance raise. So is there pull forward? All those questions to be answered. But right now, SMCI just marching up another 27 points here. Haven't sold a share. I'm still long it all. It's in the long-term account. Loving it.
Dennis, are you sure it was the fall or was it August?
It might have been August. I've been in it for a while.
Yeah,
I wasn't, and actually I was down in this for a little bit too. I was in it. I think I bought it around like 260. I think after I bought it rallied like 280 or 290, and then it pulled back, and it saw 228, 226. It kind of just bounced around. But what that was digestion from the previous move. So if you just blow out the chart a little bit further, you had the big move in April from $90 to $350. And then you had sideways consolidation, basically same thing as NVIDIA for 6 months. The whole back half of 2023, NVIDIA and SMCI digesting the move. Usually those digestion periods eventually resolve in the way of the previous trend, which was higher. So now we have NVIDIA over 600, AMD breaking out. The only one lagging in my acronym so far is Amgen. I think I put it in the acronym around 304. I bought it at 297 though. So I'm up slightly in it, but I wanted that little bit of diversification. That's why I went after the Amgen there. I didn't want to go all in on AI. And I think there's going to be talk of, I think this is a sleepy weight loss drug play here. They've got multiple weight loss drugs they're working on here. I think Amgen could eventually not maybe be Lilly, but it's trading like 15 or 16 times. Could it move to 20 or 25 times if they start to talk about their weight loss drug a little bit more? If they start to have some successful trials? I think so. I don't think it's out of the realm of possibilities. This isn't going to be a $600 stock, but it wouldn't surprise me if it's a $400 stock. So it's not going to be the SMCI of the group, but wow. I mean, so far so good with that acronym. NASA, rocket ship.
I just want to mention the SMCI because we talk a lot of short-term investing here, and we talk about the longer-term investing. And it was a big dip. The reason I remember it is the thing gapped down. I remember when you bought it because it was a big gap down day. And it was off the earnings in August. And I remember you're like, well, whatever. You were getting it a discount. You don't like to chase. And I remember you said you were getting it at a discount to the current price. And it took, I mean, look how long a consolidation period that had before it finally had the breakout. But who talked about this stock between maybe 100 and 150? And I don't know if he's listening today, but Christian Fromhertz. I remember him. He was like, this is an AI thing, and I just wanted to give a shout out to him. We'll just give you some quick pre-market levels here before we move on. And I'm just going to give you the pre-market high, not because I think the high's in, but just because there's targets 460.06. So it is $9 off its pre-market high, but it did that on Friday too, and y'all know what happened. NVIDIA, it traded up to 605.20. So there's a target for you. That's $4 away. AMD just up another $1.40, and the pre-market high in that. If you're looking for a target right now, the pre-market high stands at 178.87. So if you're looking for some targets here, there you go for the chip stocks. Broadcom, I think Goldman was talking positively about
It was the
that
one
on
that I
Friday.
thought about putting in the acronym. So I thought about putting AVGO at the back part of NASA because I wanted the NASA, kind of sounded cool. So I wanted that acronym. So I wanted the extra A. I thought about Broadcom for the AVGO just to go all AI, but then I'm like, I thought about Kramer. Are you diversified? I'm like, I'm definitely not diversified, but I wanted to add that healthcare stock in there. So I went with the Amgen, but AVGO was one I thought about too. If I went all in AI, it would have been NASA, NVIDIA, AMD, SMCI, and AVGO.
Okay, let's 810 and 811 exactly. And let's bring in our guest, Scott Shalady, the cow guy, going to get his perspective on the markets. All right. Good morning to you, Scott. Glad to have you here on this Monday morning. And AI. I mean, I know you're involved in the agricultural industry as a young lad working the farm for your family. So give us an AI play in agriculture.
Well, I mean, that's going to be obviously that'll be all around weather because that's going to be able to take all that stuff and compile it way better than any weatherman could. So AI will probably be big when it comes to kind of forecasting, I think. But I also, just on another side note, I just happened to be flipping the channels as well this weekend. I was getting a little sick of all the pregame stuff for all the football. And they had the Chicago Cubs. They were replaying Chicago Cubs convention talk with their new manager Craig Counsell from Milwaukee. And had I been at that conference, I would have liked to have asked him, because we all have seen Moneyball, how AI is going to revamp some of the decisions he makes when he plays. So AI in agriculture really is going to be heavily weather centric. I think that's going to be the play because that's really one of the biggest outliers. I mean, obviously. We in the ag world, the ag space, the trading space, we have to pay attention to everything else that the equity traders and also the fixed income traders have to worry about. But man, that weather's that's a bugger, and that's why I think sometimes, a lot of times, that agricultural traders maybe have a leg up. They don't make as much money as the guys on the equity desk or the fixed income desk of the big banks. But I think they have more to worry about, and that one's going to be weather, and that one's probably going to be the biggest impact that AI has.
So there's specific companies that are more. I mean, like people are mentioning Deere. I mean, I don't. Deere has it. I don't know where the AI. I guess that will help them with the farming. Cat. I mean, are there weather related? I mean, companies that are, or is it just going to be the chip companies? They're going to create. People are going to buy the chips to predict the weather, and that's all you need to know.
Yeah, I mean, I don't think I could go out there. I mean, maybe DTN would be something that I probably would look at because they started off as weather, but now they're in the ag space. But I'm not even sure that I'm not even sure that they're public though. So no, I think you're right about the chip space and how that's going to go because. I mean, weather is so benign; everybody does it, and you're going to see that also affect, the major channels too about what they're going to be putting out there as far as what we have to worry about on a daily basis. So I wouldn't say it's just an ag play; it's a weather play and it's a chip play.
Scott, what about the overall market here? I mean, it's been an interesting 2024 so far. We had a first week or two where we got a little bit of selling pressure, some profit taking. But then the buying has just come right back in. S&P making new all-time highs here on Friday. Obviously the Qs have been marching. We know the AI trade has been marching here. IWM's been lagging again. Does this continue? Is it a stock picker's market? Do we just buy everything? Thoughts on the Fed? I want to ask you all these questions. Give us the macro picture, Scott. What are you thinking?
I'm definitely not thinking six rate cuts. I'm thinking maybe one. And the market's begging for them so bad. Anytime it gets a whiff of news that might look like a rate cut, it screams higher.
Yeah.
So it's not trading like it's not trading healthy to me. They're begging for rate cuts now because it's an election year. They might actually just get them. I don't know for sure. I mean, look, we've had every other agency of the government's been politicized. It's got 3 letters, right? FBI, CIA, DOJ, CDC, WHO. Now, I call it the FED. They could be politicized this year too. So you might see some rate cuts that maybe not be warranted. But at the same time, I would say the macro picture when it comes to rate cuts, whether we should get them, on one hand, if you're really worried about inflation, which is the Fed's mandate, you wouldn't cut them. You'd keep them the same. Maybe, I mean, I've heard some other folks out there argue for a hike. I wouldn't maybe do that right now, but I'd keep them, just because you think you got out in front of inflation does not mean, okay, that job's done, let's start cutting them, because you're nowhere near your 2% mandate, number one, you're at 3.4. But number two is that if you got it up here, if you want to wait and see, I get that, but you're not going to start cutting until you start to see some weakness in the economy. The problem is,
look at the labor market. The jobs numbers is so resilient. Like people are not, maybe there's pockets, but jobs have been resilient.
Yeah, it's weird because the jobs numbers, the JOLTS numbers, those jobs aren't. I think I just want to live another 25 years so I can find out what's really going on with jobs, because that's the only really big number that has been very difficult to try to get your head around, because it just doesn't make any sense. I would say, with a fair degree of confidence, anecdotally, I don't have a ton of information about this, but I would say that 60% of America, the lower 60%, is in a recession right now, and the top 20 to 30% is also enjoying the fruits of inflation and what that's doing in the market. Because the news that came out earlier this year contradicted what everybody was thinking as far as what the Fed was going to do. That's why we had that bumpy start, right? We got out of the gate, we tripped, and it was really because everybody had been out over their skis with all these rate cuts at the end of last year. Between Christmas and New Year, the market was just trading like it was funny money, and I think that was good to see the market finally try to take hold. We're not going to get 6 cuts. We're not going to get 4. I don't think. I think that I would say that if you get your job done, you'd keep them where it is. And then if you start to see weakness, then you start cutting. Just because you reached your goal doesn't mean, okay, we can start cutting. You're going to put yourself back in that problem again. But there's not a lot of people on that island with me right now. But I'm going to have to kind of weather the storm. Equities are, to me, they're overpriced. I mean, they because of this rate cut talk. It's just, and you might be careful what you wish for, because you might get your rate cut, but only on the back of the fact of a 15% downdraft, right? I mean, that might be where all these people are right when they're talking about getting rate cuts, because of the election. Go ahead.
That's what I thought too. Coming into this year, I was like, they're not going to start cutting rates until the economy starts to fall off a cliff. But then Powell has that press conference at the end of the year talking about rate cuts, and I'm like, holy crap. I'm like, now all of a sudden the Fed's in the prediction business and not in the data dependent business, apparently.
Right.
So, that's where I was like, oh my gosh, well, you can't fight the Fed if they're going to start cutting rates and the market's at all-time highs here and jobs are flying. I mean, hard to be short stocks.
Right, exactly right. And I think that's going to be the case for the first 6 months this year until we get some data that says otherwise. Because if you're between the age of 25 and 35 and you want to move to a good job like you have already, they're just not out there. There's a lot of service sector jobs. There's a lot of different jobs, but it doesn't add up to me. But the other thing, to your point about Powell, December the 1st, if you remember, he came out with the standard, the job's not done yet, stay the course, inflation's still not, we're not at our target. And then a short 2 weeks later, actually 13 days later, December the 13th, we get the dot plot, which is absolutely mind-numbingly boring to me, because that means that I spent all this time in finance to be, looking at a Rorschach test. But these people have put their expectations out there for 2 and 3 rate cuts, and the market goes bananas. Well, that's all it took. So the markets took off on the back of the fact that we're going to get rate cuts. They go from 2 to 3 to 6 to 7, if you remember correctly. I think we're now back to 3 to 4. But I would argue that that's even pie in the sky. Equities are overpriced because of this expectation. Let it happen. I'm fine with that. I'm not going to get in the way of it and fight the tape. But just know that we're not that far away from there. Okay, there's going to be a reckoning. Right now, everybody, when I tell them in the bar on a Friday night that the economy's not doing well, points right to jobs and right to the stock market, and I get it. That's fine. Here's the deal, though. The economy is not fine. 38% of reporting companies this year said they're going to be laying people off, right? If you look at all the people, there was a Wall Street Journal report last December of all the firms that fired people last year. You look at just the underlying economy for that lower 50 to 60% of the economy, and they're getting killed. We've got delinquencies for auto loans up, delinquencies for mortgages up. I mean, and look at the credit card debt that's only being compounded by these interest rate hikes. So it can't last. And consumer spending is another one they always, look how strong the consumer is. I'm telling you, that consumer went from pandemic savings to their savings. Then they went to credit cards. Then they went to home equity lines of credit. Then they went to their 401ks. And now they're doing buy now, pay later. All right. They're going down the line of death so there's going to be a reckoning, but I spell it WRECK. All right. This can't go on. And I just know in my heart of hearts, I don't go out there and talk about it a lot because everybody wants to know when it's going to happen when you say stuff like that. All I can tell you is at some point in time, you're going to run out of money and we're getting closer and closer. I don't know what they're going to exhaust next, but look, buy now, pay later was one of the biggest deals this last Christmas. And if you look at the Christmas numbers, everybody talked about 9% year over year on sales. That was sales online. They didn't really make a big deal. Actually, it was only the people that had online sales that reported those numbers. When you put in bricks and mortar, it was 2.5%. Then you back out a 3.5% inflation rate, and our retail sales for Christmas last year were down. So look, I know it's an election year. I know there's going to be some funny stuff out there, but I'm just telling you, there's going to be a reckoning. This can't continue.
All right, let's talk about the commodity picture here. I'm looking at, soybeans kind of near their low of the move. I'm looking at wheat. I'm looking at some of these commodities. Crude has kind of been hanging in there. I haven't taken a look at sugar. Well, actually, I think S is sugar. Where is the inflation? Or is it going to be this wage inflation that's going to get us? People wanting raises, PCE on Friday. So maybe if it's not so much the commodities and the durable goods and everything, is it going to be the wages that kind of creeps up us and just goes, oh, no, inflation is not under control. We're running hot again.
Well, we had a big sucking sound come out of the commodities markets at the beginning of 23, and that was all the inflation money leaving. And look at all of them. Like I said, the big three, corn, wheat, and beans, have all trended lower. I think we've hit the bottom. Maybe, I don't know if there's a lot further more to go. I think we're going to go sideways here until we get a weather scare. And I think that the farmers that have been caught undersold will probably let some grain go then. But look at the chart. It goes from the upper left to the lower right on pretty much all three of those. And that's going to be a problem. When it comes to the wages, you're exactly right. And anecdotally, I can tell you the folks that own restaurants, when things were going through the roof and the cook and all the people in the back needed a raise, they got it. But now that all of that stuff has come off in price, it's still going up, but at a slower pace. Remember, we have a positive inflation number. You can't go back to the kitchen and say, okay, things are under control now. I need to take back that $5 an hour I gave you. And that's going to be a problem. And it's already a problem. And with the CFOs of Walmart, Costco, Kroger. Now, those are food places, fellas. Food. They're saying they're guiding lower, worried about what this consumer's been spending because they're moving down the value chain from, say, beef to pork to whatever's next. And if the WHO or WEF, the World Economic Forum, has their way, we're going to be eating bugs.
All right, any place to hide here? I mean, you can still get pretty good, pretty good rates on your dollar. Bitcoin is pulled back. With this eventual reckoning coming and a pullback in the market, where's the safest place to have your money? Under your mattress?
No, I mean, you got to be in the market because markets, as long as our population's going up, and by the way, we don't have a southern border, so it's definitely going up. As long as your population's going up, you're giving birth to new customers. Generally speaking, page 1, paragraph 1, sentence 1, your equity market will rally, okay? But you just have to have money to make sure you want to put into it. So I don't think there's anything wrong with waiting for pullbacks with your money at 5% at all whatsoever. And that's what we've done with our family money. So I think that's fair. I think that you need to be in the market all the time. You just don't want to be stupidly in the market. If your grandmother died right now and gave you a big inheritance, would I pile in and buy the market now? Well, if I had a 40-year time horizon, it wouldn't matter. But if I have a 10-year or 5-year time horizon, it definitely matters. So I think you could be a little bit more picky. But as far as where do I want to hide out, I do think you're right. Everybody asked me the question over the last 25 years, where is it going to be the next place that we're going to be able to balance our budget? If you remember, the last time our books looked good in this country was right during that tech boom of the .com era, right? Well, I've always wondered what it was going to be. Was it going to be healthcare? What was going to be coming around the corner? Where was that knight in shining armor? And it looks like you guys kicked off the show, it looks like it's going to be AI. I think it's a little early. Everybody's still getting excited. Remember, anything with the .com after it really rallied too. But I think that's absolutely going to be the place where your money is going to really make a difference, and it's going to, and hopefully it makes a difference to the books of the country. Because fellas, we're going to hit 35 trillion in June as far as our debt goes, and that's not good either. That's a whole nother conversation.
Well, let's go into that conversation for 2 minutes here, because it is a concern. I mean, at what point in time? I mean, we've taken, $35 trillion. Where does it stop? I mean, where do we get to a point where it's uncle and we say we can't go to a 50 trillion or 60 trillion or 70 trillion? I mean, we could argue a lot of the stock market growth has just been ridiculous overspending, not just by the consumer, but by governments, by just feeding money into this economy on a continuous basis and running deficits on a continuous basis. I mean, if we ever had to stop running a deficit, what does that look like? I mean, all of a sudden, what is, all this spending? Because there's so much government spending that drives this economy. If we ever had to stop running a deficit, what does that look like for the economy?
Well, it's not good because you're taking, last year in 2023, the government was responsible for well over 600,000 jobs out of those jobs numbers we got every month. 53,000 jobs per month were new government jobs last year. No, 56,000, I'm sorry, because that number in 2023, it was double the 23,000 or 28,000 they averaged in 2022. So 2022, 28,000, 2023, 53,000, 56,000 at every time. So you're right. And also, it's unelectable. You can't go to Washington saying, I'm going to I'm going to cut spending and cut entitlements. Look, our debt to GDP is getting close to 125%, right? If you get to 130% of countries that had a debt to GDP of 130%, 51 out of 52 have gone bankrupt. The only one that didn't was Japan. And Japan's well up over 200. And I'm sorry to say that our lawmakers are looking at Japan saying, we got a long runway here.
He's the cow guy, Scott Shalady, joining us here on Pre-Market Prep. Scott, always appreciate having you on, and we'll dial you up again real soon.
All right, guys,
Scott
thanks.
Shalady, the cow guy. SP's just hanging out here near the highs of the session, just one tick off it. So we'll be keeping an eye. I had to go back to the front month futures, going back until like April, or where was that? Where did I get that 92 level? Going back to 2022. But Dennis, it's not all good news out there, especially for ADM investors.
Yeah, so Archer Daniels Midland here, down 10 points. Sounds like they're doing an internal investigation at the request of the SEC. And let me just go grab the headline, and they have actually let their CFO go. So they put their CFO on leave. Multiple downgrades today. We got Goldman downgrading it, obviously, on this news. They are also cutting their earnings forecast amid this probe as well. So I don't know if the CFO was not counting something right, but this is a rare thing to see. They put the CFO Vikram Luthar on administration leave, and this is in response to a voluntary document request from the SEC. Also, we're talking about their guidance. They're talking about cutting their earnings forecast here amid this probe. Multiple downgrades here today. So I don't know what the CFO was doing, but maybe he wasn't adding something up right. This is not good news. When you see accounting issues, it's usually what Kramer says equals sell. I'm kind of with him on that. I don't like seeing accounting issues because if you can't trust the books, you can't trust anything. This is not good news. Down $10.
Yeah, down 10. And I would say that there was monthly support. This was back in July and August of 2021. Actually, in August and September, you had a pair of monthly lows at the 58.50 area. We are below that right now. Your pre-market low comes in at 57.10. So just kind of, just down this much on the news. CFO God, I mean, I'm definitely not starting a long position here, but this is just such a big move for this. I would look at this $57 to $58 area as potential support. I mean, it's really super bad news and it's down, it's getting hit. I just don't know how many times you would make money shorting ADM. I'm saying AMD because we never talk about this stock. ADM down $10.
It's
They'll
hard to
jam.
chase this stuff, but when you've got accounting issues, we just
Yep.
don't know. Not enough information here. Cutting guidance, letting the CFO go. Sounds like there may be a problem with the books. Sounds like I need more information. Like you think about Boeing on day one, and everybody wanted to be, oh yeah, we're gonna go Boeing here. It's down $10. That was $235. Well, we ended up going down to 200 multiple days later here. So let's get some more information.
Okay, yeah, let's move on. Boeing did get a bounce off that $200 area. Let's just kind of stick on like the negative news thing here in China. Holy mackerel! Now they're leg lower here. Baba gives way. That's down $1.91. K-Web, I'm sure that's not looking good here. Dennis, I know you've been cautious. We've been cautious on China for a long time. Is it getting tempting it all here
No.
on the long side in China?
No, because it's just been the death of money. I mean, it just continues to go lower. FXI gets hammered again here. We've completely decoupled and don't even care what China does anymore. And I don't know if it's like just worries about geopolitical risk or worries about US, China tensions overall, but people do not want to invest in China. And it continues to underperform, and it's been massively underperformed. Everybody's trying to pick the bottom on Baba. It continues to go down. Dan Nathan on CNBC puts it in his acronym here. What I've learned the hard way is when stocks are weak, it's hard to turn that story around. And this story in China stocks, besides Pinduoduo has been a better one, a little bit of a bright spot. But Alibaba's and the Baidu's and the FXI, even the K-Web overall, have just been an epic disaster for investors here. And they've been value traps. And I don't know what turns that story around.
With Pinduoduo, I mean, do you take the other side of the trade there, and look at it like it just can't,
like it's
can't
China
move.
and eventually starts to fall
Yeah.
down too. I don't know.
Yeah.
Like you could say overall. I mean, Pinduoduo has had a hell of a run since the lows got down to like $23 in 2022, which is obviously an overshoot. But we're still not back up to where we were in 2021, over $200 a share. So it's been a nice run, but 2021 investors are still down on this stock. So I mean, it's been best of breed over in China because there's so many China names that are just sitting near 52-week lows. So you can't argue with the chart here on PDD. It's been a good one. But I just think there's so many easier places to invest. Why go to the hardest one, which has been China?
All right. A story that caught our eyes a couple weeks ago. Macy's, $21. Dennis, I know you were part of that group that was putting together that bid. Well, it did hit 21. Man, funny how that works out that way. It hit 21. It's been under pressure. We are getting news this morning that they're not going to take the deal. They don't want it. It shows it lacks compelling value, Dennis. What do you say to Macy's shareholders here trading up 36 cents?
I mean, and they're going to say, oh, they're not taking the deal. They're holding out for a better price. But I just don't think that better price is coming. I mean, Kohl's, we waited and waited and waited, and obviously that price never came. We can talk about the value of the real estate, but that real estate's worth a hell of a lot less than it was 5 years ago. Commercial real estate, you look at some of these malls, and they're, not ghost towns, but they're not hopping like they were 5 to 10 years ago here. So I think if you're valuing those real estate dollars where they were 5 or 10 years ago, I think some of that commercial real estate is actually down in value. So I'm not a fan. I'm not a fan on being a hero here. There's lots of other places to invest. There's no AI story here whatsoever. I just think, why be in Macy's? Why be in Baba? Why be in Macy's? Why be in the dogs?
Okay, it's merger Monday here, right? And we have a merger going on, and we have the acquirer Sunoco trading here in the red, breaching the support at that you had at the $58 level. Now we can look at that as resistance. And what Sunoco's doing is they're going to acquire New Star in an all equity transaction valued at 7.3 billion. Let's look at the price action in a New Star here and traded up $4 here. New Star Energy getting taken out.
Yeah, I don't trade the stock at all. Obviously, it had a 7.27% dividend, which was nice. There is some value in the energy stocks. I'm not gonna say, you look at some of these, PEs on some of these energy stocks, and maybe you do see some consolidation. I mean, this is a sector that has not participated in the bull run whatsoever in the last 6 months. If anything, most of these stocks are down. I mean, you can look at Chevron and Exxon sitting near 52-week lows,
What's
just
going on with
disastrous.
those?
Oxy holds that 56, but I still think that's just Buffett holding it up here. He ever kicks his finger off the buy button. I have not bought Oxy just because it's been down here so many times here now. When Buffett buys, nobody seems to care anymore either, and that scares me too. So I've actually, I contemplated buying Oxy down here at 56. I don't have a lot of oil, and Buffett, we know we got the Buffett put there, but at the same time, I just think, wow, it's been such a tough investment, oil here. And I don't know. Maybe it's telling us something about the economy as the oil prices continue to slip. Scott makes lots of good points here too. Maybe the oil is going to eventually lead us down, but so far the stocks have just ignored oil, and oil stocks have just been left in the dust.
Yeah, I mean, this is really a divergence here. Oil's holding steady right in the 70 handle. I pulled up the USO here. But really on the rallies, we've had the Middle East and things. The Red Sea. If things calm down in the Red Sea yet, there's a lot of things going on, but still, ExxonMobil can't catch a bid. CVX, they report later in the quarter. Uh, it's on monthly support here. So if you want to, take a look at back at that level 140.46, that was in September of 2022, just kind of hanging out here. Look at that, three monthly candles right there, right at the one. Oh, we got the 132.62 this month, and this is when they announced their big buyback. Remember that back at near the end of 2023. Well, they're buying on. They're definitely bids are getting hit in this one. Big pullback in CVX.
Moving on. I talked oil. I'm not a fan. So let's go and look at earnings preview this week because we have a
Sure.
lot of big names coming up tomorrow night. So tonight we got a couple banks, Zion Bank. We got AGNC Small. Logitech's going to report. UAL is going to report. Tomorrow is really where the fireworks get started. We're going to hear from Netflix tomorrow night. And NFLX has been, just consolidating here, waiting for the report. We've had the big run back in October from 350 up to 500. And now we've been in consolidation station here for the better part of a month and a half. And we're waiting for new information. How are the subscriber numbers looking? What's happening here? And, obviously, we've had difficulties with some of these other streamers, but Netflix has been best of breed. Are they going to blow the numbers away here, make a new high on the move up over 500, or do they disappoint the street here, Joel? What are your thoughts going into NFLX tomorrow night?
Consolidation station here ahead of the report. You do have a triple top at the 486 area. You have punched through that in the pre-market, getting up to almost 489. But man, just the way it's been trading the last couple days, I think the people that were selling at 486, trying to lighten up ahead of the report, think they're going to look at this and going to say, hey, I'm getting another buck premium to where I really wanted to sell. So keep an eye. Must absolutely hold 486. That was the top of the range from the last three sessions. Currently trading 486.60. Nice quiet move. Didn't quite get back to an all-time high, but let's not be looking at in Netflix. Let's take a look at UAL here. UAL, that's trading up 28 cents. Good support at 38. Being dragged down by Delta earnings, right? Delta peaked at 42. That's kind of hanging out. I mean, you found some support. You do have a good level. Someone trying to wiggle out of some stock. 38 and a quarter. That's your major number in UAL. You've had 3 of your last 4 highs there. So in Al, you're still 75 cents away. So still not really participating. And I think I saw did I see an upgrade to American Airlines this morning, or did I make that up? Wolf Research, yep, they upgraded American Airlines to outperform, announced a $17 price target, trading up 24 cents. Oh boy, you still got a deal. Wow, you're right at yesterday's high here. So you hold this 1380, punch through 14. Let's see if the upgrade from Wolf Research could do anything for AAL.
Just overall, these airlines, they have significantly lagged. Like, I mean, if we feel like the economy's firing on all cylinders and everybody's just spending like, sailors out here, I mean, the airlines are telling us a different story. They all topped out last summer. They haven't got any love at all. The earnings have been okay, but I don't know if it's the market just saying, look, people are going to have less money in 2024 to do expensive things like go on fancy trips, and there's going to be less travel. And maybe AI is going to slow down the travel too. I mean, we know, like, you're getting to this point where business meetings, there's a lot of stuff done virtually. That technology is only going to get better. Apple Vision Pro, I can envision, helping with the technology there as well for business meetings here. It just doesn't equal like everybody flying all over the place to do everything here. And I think you're seeing like a secular decline here in the airlines. And that concerns me. It is concerning on the charts here. I do own a little bit of AAL in the long-term portfolio, almost thinking about just cutting it and moving on. At this point in time, I bought around 15. I'm down a buck and a half on it or something like that. But it just hasn't been the performer that it should have. And I think, the earnings have been fine, but these stocks are telling us something else is happening here with these airlines. I think there's a lot easier places to be.
The save saga continues. Some of that pre-market action that you saw on Friday with the refinancing or restructuring never did get to the pre-market high. A little bit of consolidation here for save. I see trading up 24 cents here. That is nothing to get alarmed about here, but we are just leaking slightly
Well,
here.
it's Gilead here, Joel. We're not
Okay, let's go.
Gilead. So GILD, let's get to the pro here. Just break out the headline here, but this is a huge down move for Gilead. This news just broke here after 8:30. They provided an update on their phase 3 EVOKE study. The study did not meet its primary endpoint. You never want to see that of overall survival in previously treated metastatic, I'm probably saying it wrong, non-small cell lung cancer. And this was a drug that people were excited about here. And obviously, not meeting the primary endpoint pushes it back a little bit. Phase 3, when you get to phase 3, it's moving along. So you don't like to see those failures in phase 3. Did not meet primary endpoint. Stock is trading down 8 points here right now. Gilead has been a source of strength for the drug stocks. It has been marching up higher, giving back its entire move now in one foul swoop from, the entire move basically from the last 2 months when it's moved from 75 to 87. We're trading down here at 79 here right now. I'm not sure if this is a dip to buy. Gilead still, 3.8% dividend is nice. Value stock, PE is kind of lower, but I mean, they need more drugs in the pipeline. People were excited about this one. If this one's not going to be one of those drugs, all of a sudden, there's a repricing here. And that's why the GILD trading down 7 points here in the pre-market.
Dennis, I don't know if you had caught the news as it hit. I mean, it's really a precipitous fall here. I could look, I'll go to the 1 minute and boom. But yeah, 1 minute, and this is just for technicals. And I don't think you were probably trading it, Dennis, but looking at the dailies here, right? And then you see a stock like this fall $8-9. Average daily range is probably, well, it had a big range on Friday. What would be, just looking at the chart real quick, you talked about the rally from 74, it didn't quite get there. Where would be your area of interest? Let's say you had a short on, just looking at this daily chart here, not being fancy, looking at a whole number, where would you had expected a bounce or something?
75. I would expect a bounce to 75.
Okay.
But I don't know if it got that low.
No, it didn't. I see 3 lows at 78, just
You're
at the
looking at the
70.
little low, yeah.
Yeah,
I'm just
yeah.
looking further out, and there's so much consolidation at
Okay.
75. So I think you're early. But again, this is a stock that people have been buying lately. So is a stock in an
I know.
uptrend. So if you were short this thing, you're probably bringing it in on this. I actually think this dip might get bought on Gilead. I actually think this dip might get bought. It's early. We're 15 minutes past, only in pre-market trading. Things only trade 164,000 shares.
Yep.
I think this dip gets bought actually in Gilead. I don't know if I'm a buyer, but I think the dip gets bought.
Okay. All right. There's your news on Gilead. A stock that's not participating in the market and a sector that's definitely not participating is the EVs here. And you have Tesla after the close on Wednesday. I mean, how many times in your trading history, Dennis, have you seen Tesla have the S&Ps just ripping people's face off? And Tesla going down here. What does your and I know NIO, I mean, that thing is I don't even look at it when I see the percentages down because it's such
Well,
a
it's a
low
double
price
whammy. You
stock.
go over there, China and E and EV combined, and EV has been an epic disaster, and China has been an epic disaster, and that equals a real epic disaster for NIO. But I mean, EV, so if we just talk, and we've talked about this before, that's why I've stayed away from EV. Obviously I have some exposure, but I haven't been, jumping and buying these dips now because I think there's going to be. I do agree with Scott on a lot of points. I think consumers are going to have less money in 2024, and I think going and upgrading to a fancy, electric vehicle is not going to be in a lot of people's budgets. I think the big three are telling us that because they're putting less dollars into investing over there. So if you look just through it all here, I mean, what a disaster. Tesla's held up okay, but I mean, Rivian has been a disaster, and Lucid, just an epic disaster. And Fisker looks like it's going out of business. I mean, it's 80 cents here now.
Oh,
All these small EV stocks have all just, went, and then lithium stocks have just been epic disasters too. I know because I'm
shoot.
long a couple of them. And, I was long them thinking, it's going to be EV's going to be the turn. Well, we're early here and the people don't have the money for it. I do think there's eventually going to be a movement to EV. I don't think it's in 2024. That keeps me away from Tesla as well. I know we got the bots they're talking about. I saw the video of the robot folding some laundry and doing some stuff here. So Musk working on some other things, and never bet against Musk because he works on other things. And Tesla will be a lot involved in AI as well. But if you're just taking Tesla at face value, electric car companies are not where you want to be in 2024.
Also, now, Dennis, I know you're in a newer house, and we've had some preliminary discussions here in the Elconin household about getting an EV. Man, oh man, you got to spend some money in your house to make sure that you have the proper charging and I mean, so on top of the costs that you already have, while they're starting to come down a little bit. I mean, you got to get a major upgrade, to your panel and everything. So there's another cost. Now, like I said, you're in a newer house, so chances are you would have the juice to do it. But that's another added expense. Tesla made a new low for the move on Friday, down 21 cents. You probably see since the earnings are after the close on Thursday, probably a little bit quieter of a tiding range as people, if you're short it going into the report, yeah, maybe, bringing it in here from 260, really going contra to the market. And, if you want to get long, going into report, well, you're looking at a steep discount here from where you ended 2023.
Yeah, on Wednesday night. I mean, if Tesla says anything okay, maybe it bounces because it's, very, obviously going into the report, expectations are very low here. So it's rare that Tesla goes into report and they got a low bar. They do though. That being said, I think, like you're seeing Tesla price cuts, you're seeing issues here I think demand is softening for electric vehicles here. I think Tesla's going to feel that too. So I'm somewhat concerned. Tesla's not my stock for 2024. It wasn't in my acronym. I didn't call it TASA or NADA. I kept Tesla out of there intentionally. I do think there's a place for Tesla long term here still because I never would bet against Elon Musk, but I just think EV, I think the people have a lot less money in 2024 for big ticket stuff like brand new fancy electric vehicles.
Okay, so is cutting jobs a good thing or a bad thing? Right? The market reacts different ways to it. Well, you have a solar edge here cutting 16% of their global workforce under a strategic restructuring move. You did get a nice pop in that, but people were waiting arms out on this one, way off the pre-market high at 73.76. Do these cost-cutting measures at Solar Edge here have you looking at the stock in any more of a positive light? I know we've been quite dour on these things for the past year and a half, but talk about the price action
I
in
don't see
Solar
interest
Edge.
rates at 2-3%. And there's no reason to go and get bullish, all these solar stocks until we start to see the TLT have a significant rally. These are leverage plays on interest rates because people have to get financing to buy the products. And people aren't getting the financing as cheap as they used to. And some of these projects just don't make sense when the financing is 7, 8, 9%. So this is what is killing them the most. Higher rates have destroyed the solar industry here. Maybe lower rates will bring it back. But until we start seeing rates significantly drop, it's hard to get bullish, all these solar companies here. And solar, just bring up the TAN. It has been a disaster. You think about how many stocks are trading near all-time highs, and the TAN is near multi-year lows. The reason for that is all rates. Is there going to be a turnaround? Yes. When the TLT starts rallying over $100, you start loading up your solar stocks. But until TLT can stage some sort of significant rally, it is hard to be bullish solar. It's all about rates in the solar industry.
All right, and TLT, it's come down off that $100 level, kind of consolidating at 94. We do have some economic data coming out, but it's not going to be a little bit later in the week. We get durable goods. I believe that's on the 25th. New home sales towards the end of the week. I guess the big number that will be at the end of the week, and we get the core PCE price index for December, personal income spending, and pending housing sales. So we have the earnings to occupy Tuesday morning. Dennis, let me know if you're interested in looking at the technicals. We do have a whole host of stocks that are reporting Tuesday morning. DR Horton. Let's just take a quick run at the chart
Sure.
on this one. Right up near all-time high.
Home builders have been monsters. I
Yep.
mean, the housing shortage is real. These stocks continue to find a way. Again, you would think with higher rates that housing wouldn't be resilient, but we know why, because there's no supply out there, because nobody moves, because they're all locked in their 30-year cheap mortgages here. It's not the same story in Canada. It's a completely different story in Canada. Most of these home builders, these publicly traded home builders, do not even have operations in Canada, though. So you can worry it's a completely different story in Canada. And that's because people will move. And that's because in Canada, they don't have 30-year locked-in mortgages. So it's the 30-year locked-in mortgages that's kept these companies just printing money. And if rates start to go down, it's actually just going to be more fuel for these stocks, which have been unbelievable companies. I've got this trade absolutely wrong not to be long these stocks. I've stayed away from them because of higher rates. It hasn't mattered. Underestimated that nobody's going to move and there's no supply out there.
GE, a darling of 2023, continuing its upward trajectory in 2024. One of the rare cases in the reverse stock split day and age that's rallied. But, nice move here in GE, trading up 47 cents. The recent high, the move, definitely not an all-time high because we know we can go back and look at the charts. So if you're looking for a target, the recent high of the move, it's getting pretty darn close to that. That's 130, 130.80 that was hit on January 12th. That was a week ago on Friday. So that Verizon, boring.
And
I'm sure
again,
you know.
GE is maybe, it's a good turnaround story here, but let's give it perspective. I always like blasting out the chart a little bit further. People supposed to say, what a fantastic
Okay.
company, GE at all-time highs. That is short-termism. It is not even close to all-time highs, folks. The all-time high on General Electric is way higher. I got to go to all data here. The all-time high for General Electric is $350 a share. So if you invest in GE way back 22 years ago, you're down 65% on your money. It's been a terrible, terrible long-term investment. It has bounced because maybe it overshot, and we underestimated the turnaround here. So it's good that this company is turning it around, but this stock has not been a good long-term investment at all.
Okay, let's we're doing a lot of the earnings here for the stocks. I'm just gonna scroll up in the chat here. If I missed something in the chat, could you throw it in there again for me? I see Rob Irwin talks about AMD nonstop. That's a big old candle, big old monthly candle, up 52 cents in the pre-market. I mean, the only number you have is 174 and a quarter. That's where it hit on Friday, and it closed right there. So if you're trying to short this thing and bring it in for a gap fill, that would be the area. Besides that, I mean, really no levels there in AMD to take a look at.
No
Uh,
reason to short stocks making new all-time highs. Write that down. People get murdered shorting stocks at all-time highs. You short weakness, you don't short strength. Like, well, I short stocks every day. I'm scared to death to short AMD here right now, long in the long-term portfolio. But I mean, is it overvalued? Maybe, but you know what? There's a revaluation happening on all these stocks. People coming in SMCI, shorting it, saying, "Oh yeah, 355, that'll hold." Now it's 100 points higher here in a day. I mean, stocks making new all-time highs, don't short them. That's the worst thing to do. Like, people naturally think the stock's going up, I'm going to short it. This is how you make money. You know how the shorts make money? Shorting the crap. They're shorting the companies that are just struggling, and they get a little bit of a bounce and they short those. The Pelotons and the Neos and all these China names that are just, just destroyed. That's where people have made money shorting stocks. They're not making money shorting stocks on Nvidia and AMD. So if you're looking and you're coming in these charts and looking for new all-time highs to short stocks, your strategy is seriously flawed.
If anything, wait for a period of consolidation, right?
Wait
And
for a
then
breakdown. Wait for
yeah,
something. Like all-time highs, Nvidia. There are people talking about, oh, you got to be short Nvidia at $600. They were saying that at $500 and $400. And you know what's happened? They've just grown earnings so much that the stock is actually the same price trading on a multiple basis as where it was when it was 400 because they've grown earnings that much. So this, people coming on CNBC and saying how overvalued Nvidia is, and giving all these arguments and that. Those people have been dead wrong.
all right, ARCH, I believe that's Arch Resources. Once again, stock at a new all-time high. Not much word to tell you. Up $2, but I just be a little bit careful on this one because it's up on only 816 shares, so not a big move on that one. Not widely followed. We got just a couple minutes left here, Dennis, and I just wanted to discuss PayPal with you and see if there going to be a catch-up trade in Square. Now, I know PayPal had their investors day and,
It already caught up,
kind of,
Joel.
got people excited. Um, is there a catch-up trade in Square? Traded up $1.05 today, just been
No, it's
sleepy.
already caught up. I
You
mean,
think
there is
so?
a huge catch-up trade here, but the catch-up trade was a month ago when Square was trading up near 79, and PayPal had not participated at all and was sitting down, in the 50s.
There you go.
So, we've already caught up and we've just caught it. Now it's past Square again. These two stocks are maybe the best two to play. When the spread gets really wide, short the one and put on the other, and there seems to always be some type of correction here, and that correction has occurred. PayPal now trading above Square. Supposed to be some news coming out on PayPal. Something the CEO is supposed to say something. I heard this week. Maybe that's the driver here. I'm not following the story very closely. Maybe the chat can help me out there. But there's been rumors that they're coming out with something big announcement here, and that's really what's driven. The story of PayPal has been driven the last couple of days by social media talking about CEO coming out and saying something. I'm not sure what that is, but I think that's why you're seeing the significant pop ahead of that.
Okay. Yeah, Square trading up $1 off its high. Pre-market high comes in at 67.39. That's really not too far away. That's above the high from yesterday. If you're looking for more on this move, there are a pair of highs at the 68.75 level. That was from at the end of the last week and on Monday. If you're looking for another target. For Square, as far as PayPal goes, that's one has been moving. New high, the move here up another $2 coming into the gap area for August, and that was it above that 66.93. You got a big old gap here to fill in PayPal up to 72.50. Trading 750,000 shares here, but I think you're gonna, before you just go lickety split and fill that gap there, I think you at least have to show people establish a bid here at the 64.5, $65 area. Okay, Triple D, it's 9 a.m. It's time to wrap it up on this Monday here. Any final thoughts? The Gilead did drag us down a little bit. That's the only negative news. I don't think you're going to get a chance to buy that on at 78 today. Not much earnings after the close. Economic numbers later in the week. How you looking at today's open and after hours?
Well, it's tech driving the bus here once again. The same stocks were driving the bus on Friday continue to drive the bus here today. SMCI is trading up 28 more points. We have AMD trading significantly higher. It's actually given back a little bit. AMD and NVIDIA, they're kind of a little bit quiet here this morning. They were up more earlier. But tech, if I'm looking overall, tech continues to drive here. IWM's driving here too. I don't know why the IWM's blasting off like it is, but maybe the rates are popping back here a little bit. That helps, meaning TLT popping back. Rates are actually going down here today. So you're getting a first day where you're getting some TLT rally here. So you day traders out there, maybe that gives you a little bit of love in solar for a day. I mean, I'm not talking to long-term investors, but if the TLT is rallying, it's often good for those beaten down interest rate plays. So keep an eye on solar for the day as day trading.
Okay. All right. We're going to wrap things up for today. Up solid 15 handles at 48.8450. Just a couple ticks higher at 48.85. Pre-market high, 48.9050. I mean, basis the contract, that we're on, we're trading at all-time highs. Of course, if you incorporate longer term, with the futures, that highs, you still have $115 to go to get over there. When we traded over 5,000 in January of 2022. AB, hope you're feeling better there. Go get some cough drops. Take it easy today. Triple D, we got to get rid of that cough once and for all. But that's wrapping it up on this Monday. Benzinga's Pre-Market Prep.